Hey guys, what's there? What's up? What's up? Where am I? What am I trying to say? Jackson, what are you doing? What are you doing? You want to make an appearance? Well, I thought you might want to make an appearance. All right, guys. Sorry I've been AWOL today. I hadn't felt very well. I went back to bed. I feel a little better now. All right. I hadn't even taken Jax anywhere. I just haven't felt like myself today for some reason. I got a little touch of something. All right. Well, but the market is trying to recover. So let's see what the market's doing. Let's see what the darn market is doing. SPY. So let's talk about gaps. So the market, what I call the market, is the S&P 500 generically and the NASDAQ. It trades all night long futures contracts. And they trade 5 days a week, 23 hours a day. Okay, well, the SPY and the Qs, which is what Joe Retail Trader uses, only trade during business hours. Futures lots of times will make a move at night, and then so SPY, by the time it opens the next morning, like for instance, here's what happened last night. Futures made a gigantic move down, and they caused a gigantic gap down this morning. Well, so the theory is, oh my gosh, this gap down, there must have been a lot of people. Presumably, I always assume there must have been people that wanted to sell but couldn't sell, because the SPY is not open after hours. So if the price gets back into that gap, it should be bearish. In other words, go with gaps in the direction of the trend. The trend's been down, especially on this 30-minute chart, but especially if the gap doesn't fill. A gap that doesn't fill is especially strong. Especially a strong indicator. Well, anyway, this morning's gap, I put it on one of the charts, and then I didn't put it on the other one. Let's see, I think I put it on the Qs. No, I didn't put it on the Qs or the SPY. But in any event, a gap that does the opposite of what it's supposed to do. People, there was actually no sellers there. No one wanted to sell it. In fact, there was buyers there. It was the gap was fake news. The people that were trading overnight were in the wrong. We didn't know that this morning. We know that now, and now those people are. It's looking actually like the gap was a better buy signal. Anyway, so we're going to put the gap in here, this morning's gap in here, and we're going to keep it blue. There was definitely buyers there, or green or whatever. There was definitely buyers there. But what I'm looking at, here's what I'm focused on. So that's the good news. The good news is, all right, we found some buyers. Well, that's great. The bad news is we still have lots of areas on top of us where there's been hella sellers, and we would expect sellers again. But in any event, we'll see what happens. The main one to get over is 577 to 585. That's the main one. So anyway, we're at 560 right now. All right, that's SPY. Here's the Qs. The Qs, I look at this, I thought this is pretty cool. This gap right here that there was buyers in today, and there was buyers the other day when I got there, and the other day. Do you know when that came from? That came from a face-ripping rally we had back in. That came from a face-ripping rally we had back on September 11th. And the market took off from that point, never came back. And it really took off from a point lower than there on of course, the August low. But that September breakout was something else. Well, sure enough, the bulls are still guarding that area. The real test will be what happens when we get back up here to the orange area, which is the election gap. All right, so there's that. Let's look at Bitcoin. I think Bitcoin rallied today. Well, earlier not really. I don't know what I was thinking. Like I said, I slept half the day. I had the computer next to me, and I'd wake up and I would look at the rally, and I couldn't believe the gap was closing. Hey, if you guys are in my Discord, it's a good place to be. Join. I'll put the link in there in a second. But in my Discord this morning, just about an hour after the market opened, I said, and it was a good comment. I make lots of bad comments too, or lots of comments that don't come true. But this morning I said, right before I went back to bed, I said, good news at 10:54. So the market had been open 2 hours and 24 minutes, not 1 hour. Good news for the bulls here in the short term anyway. VIX, the volatility index, has closed its gap from this morning and is now trading in the previous day's range, meaning hedges were coming off and presumably it's all right to buy the market, clear sailing ahead from the market. SPY still had a little gap when I put that in there. It's not doing that yet, but VIX usually leads the way by a little bit. So at least on a very short-term basis, that was good news. All right, I'm going to put this link in here in case you guys want to join. It's free. We have a good time. Invite people, copy. Well, we're going to look at my portfolio, the model portfolio, which has been doing really well. We're going to look at lots of stuff. Hey, Ethan, how you doing? You're a grateful trader, right, Ethan? You're a grateful trader. I just want to make sure I have everyone's. Sometimes people have a different handle on Discord than or oftentimes in YouTube. I'm trying to make sure. Blackwater, thanks for being here. I appreciate it. Chalk Outline guys got some live SPY trading on YouTube, free 24-hour. Boy, I was happy with my SPY trade. I don't make a lot of trades, especially in bear markets. But when the market rallied last week, I put on a put spread, took it off today. I took part of it off Friday, took some more off today, and then I reallocated and have some runners. But but I don't really day trade. I swing. I do short-term swings. Sometimes they're within the same day, but usually it's a 2 to 3 to 5 day trade is more what I'm kind of looking at. I just try to figure out where the market's going by Friday. Just in the short term, or maybe by where it's going, maybe the next Friday. That's about as far as, not with daily options, my opinion, that's all you need. Okay, I'll stop talking about me. Let's look at, let's look at my model portfolio that's doing really well, but I am proud of this. So I have 24% in the inverse fund, YQQQ, and I hate to do that. I hate to bet against myself and the market, but selling covered puts is just as good of a business as selling covered calls, not quite as good. But it's a decent business. You can make some. Anyway, today that fund was up 0.5 point. That's half my portfolio. So I got 12 bips to my bottom line. Unfortunately, I love GPTY. I like everything about it, but it was down 81 bips. Alti was down more than 1 point. And I have big allocations of those. I have about 20% of those. Luckily, I had GDXY, which was up 0.75 point. I wish I would have got that sooner. I should have got out of tech sooner and into GDXY and Index OMO sooner. Woulda, coulda, shoulda. And this fiat and dips has been really good for me also. It made me crazy, especially dips. To bet against NVIDIA goes against everything I know. But, heck, even I just have 3% of that position, but it's adding profit to the bottom line. Anyway, my overall bottom line, I was about even on the day. So I actually cost myself a little bit of money because the SPY was actually up on the day. I was even on the day. And I'll tell you why. It's because my long funds didn't really perform. Yeah, the SPY was up on the day, but GPTY and ULTY sure wasn't. Anyway, they'll catch up. And the thing about them is they pay huge dividends. This is just looking at the daily price move from yesterday to today. When you step back and look at it on a longer time frame and include the dividends in there, it makes it a little better. But it's interesting to see how these perform and how each one, I think, contributes to the bottom line. Like if I wouldn't have done the inverse fund, I mean, that made me 12 basis points. GDXY made me 13 basis points. Those two funds made me a quarter point today. Just them two. Now GPTY and ULTY lost me about a half a point is the thing. So anyway, whatever. It's all good. It's all good. Look at YSpy up a point and a half today. I really like to see this. It's a fund from Innovator. Or it's not Innovator. It's a fund from Granite Shares, and they sell puts on the SPX, but they sell leverage puts, triple leverage puts. I think XPXL is the index. Well, they've only had one distribution. I have really high hopes of them, and I just have a starter position. That's why I just have 3%. But what I'd like to do is I'd like to take some of this fiat and dips off at a profit. Excuse me. And I have a pretty good profit in there. I just need to know where the low is for this market. If you guys could tell me, because right exactly at the low, I want to take my allocations out of fiat and dips and put it into YSpy maybe. So that would make YSpy go up to maybe 10%. Get rid of fiat and dips. So then I would have YSpy, Zomo, GDXY, ALTI, and GPTY would be my long portion. And then I would still have YQQQ. It's 25% of the portfolio. That dampens out some of that volatility and really helps me out on down days. I just like to not lose as much as the market on down days. And so anyway, all right. So that's the model portfolio right there. Since inception, still bad. I mean, I'm down 14% since inception, and whereas 60-40 be down 3.6. So I have some work to do, but I'll get there. I will get there. I just need some time for those GPTY and ULTY divvies to build up. And YQQQ pays divvies also. YQQQ just pays about 20%. So it's not bad. Anyway, okay. Let's see. Let's look at ALTI and that kind of stuff. GPTY verse, all that kind of stuff. I finally put new stocks in here, or I finally put the new positions in here. All right. So we'll just start on the index buffer report. That's FIRS is a fire fund from Tidal. It's a interesting fund. It's kind of a fund of funds. It was up. FIRI was down, but in any event, let's see what the best performing SPY-based fund was WDTE or JEPI. Worst performing SPY-based fund just today, based on price, was SDTY. XDTE also did poorly. They do the similar strategy, so I wouldn't expect them to do well. I wanted to make a comment on those, but I don't want to get too off track. I know I do the weave a bunch, kind of like Trump does, but as you guys know, he's one of my heroes. But I'll try not to do that too much. But I do have something I wanted to say on XDT and SDTY. It's kind of off topic. Anyway, well, if I think about it, we'll talk about it later. All right. Well, let's see what's going on elsewhere. I mean, geez, this is bad. What's going on with the NASDAQ? Was the NASDAQ really unchanged today? Yeah, look at that. The NASDAQ was like, holy cow. All right. Let's go back here. Oh, and I also wanted to talk about my new custom indicator I'm building. I've told you guys about it before. It's a pros versus Joe's indicator, but I wanted to tell you what that was showing. So we do have some other stuff we could talk about. All right. Let's look at the Qs again. I kind of went through the Qs really fast, but I guess they bounced right back to where they closed last night. Would you take a look at that? Well, I did a bad job explaining gap. The rule is go in the direction of all gaps that aren't filled pretty quick. For me, pretty quick is within the same day. This one got, and the quicker it's filled, the more of a contraindicator it is. I just did a poor job explaining this one. Anyway, this one filled to the penny by the end of the day. Now, I mean, is that bullish or bearish? Well, it's better than if it would have opened where it opened and went straight down. That would have been more bearish. then the gap would have, then see, that's what I'm saying. The gap would have been open for a whole day, and then I would have put a great big orange or red mark on the chart. But yeah, that closed right where it started from. All right, well, let's go back over here. So anyway, the best performing NASDAQ funds were Triple QI, did a great job, and why Triple Q? God, can you imagine that pairs trade? That's the pairs trade I want. I want that pairs trade. No risk. I just want to have half of each, and I want every day to work out just like that. And they're both up a little bit. And they both pay a dividend. That's what I'm looking for. I got Triple QI and I got Y Triple Q, and they perfectly offset and perfectly hedge each other. And now I'm a hedge fund. Anyway, doesn't work like that in real life. Over here in Russell land, well, Bali's not really Russell, but Bali looks good. Just to look at the rest of these, THTA looks good. That's good to see. Okay, well so I'm trying to think if I can weave to something else yet. No, let's stay on topic. Let's finish the last of this stuff. I guess that's is that the Altiverse? You got it. That's not the Altiverse because that's the Alti allocation. All right. Here's Alti's allocation. Alti was out of cash. We talked about it this morning. They're fully invested. I mean, if this morning was the bottom, and that's one other area I wanted to weave in, one thing to look at, and I'm not saying this morning's was the bottom. We'll talk about this in a second, but we made a new low. When we made a new low, volatility was nowhere close to making a new high. So volatility, my pros versus Joe's indicator, which we're also going to talk about, is giving a divergence. It's saying, hey, it doesn't look as bad as it did last week when we were in free fall. So anyway, we'll see how long that lasts. I mean, the technical indicators and stuff can't predict if Trump wakes up in a bad mood and decides to double China's tariffs. So, the technical indicator doesn't know that that's going to happen. So, but so that's the problem. I'm not picking on Trump. It doesn't know the things in the world are going to happen. But to the extent that a market does trade with supply and demand and is somewhat freely traded, the technical indicators, I think, can really help you out. All right. Well, so let's see here. What do we want to talk about here? So that's the Alti allocations. They're fully, well, actually, I take that back. Look, they aren't fully allocated. They have a ton of money markets. They have 16. So that's even better. Okay, good job, Jay. They're 16% of money market, almost no cash. Okay, well, now let's look at I don't know where the darn freaking, where the verse is. Oh gosh, I just haven't had a good day. I swear I did all this morning, but I don't know. I just don't know why this is so freaking hard. It's cash and others. I don't know. Anyway, let's just say I don't know. Where in the hell is this freaking thing? Yeah, it's right freaking there. I don't know why every freaking time it does. I just don't understand this. This is the Altiverse. I guess that was the Altiverse the whole time. So, damn it. All right. The money market can't be up 15%, so it's not the money market. That's the Alti allocations. All right, I didn't get up early enough this morning. I have no freaking idea what I'm doing. I'm sorry. This is why I quit doing. You guys don't know how much I hate doing spreadsheets, but it's costing me too. When I used to do spreadsheets, when I used to predict dividends, I used to make $400 a month. This month I'm making $0. Last month I made $200 or 150, but the month before that I made $0. I don't make money anymore. I used to do this and make money every month, just a little bit, 300 or 400 when I used to predict dividends. Now that I don't predict dividends, but it's also my content sucks. No one wants to see this content. I mean, and I get that. I get that. All right. Well, anyway, LFGY. But this is the reason my content sucks, because I don't enjoy it. I do not enjoy this kind of stuff. So I enjoy talking about what they're doing and talking about the trades and stuff. But this stuff right here is just, I mean, all right. Well, anyway, LFGY. So this is an allocation. Okay. So that's good. I don't know where the LFGY verse is. I mean, I swear to God, I did all this stuff this morning. I don't understand why this is so freaking hard. I just hate this stuff. Insert chart. I mean, I did all this stuff this morning. Okay, well, that's the problem. I mean, damn it. All right, I don't know. I have no idea. I literally have no idea. I've done all this stuff this morning. Okay, this one works. This one works. Here's GPTY, and here's what everything was up or down. This is all I want to do on the other ones. I don't know why it isn't so hard. I don't know why it never works. Anyway, this is all I need to do every morning. I just want to show this. This is how much they're up or down. This, you wouldn't think this would be that hard, but it is. These spreadsheets suck. So GPTY was down 62 bits. The average stock in the universe was down 63 bips. Boom. That's all I want to show. Okay. And I don't know why we can't look at that on ULTY and ALTI. Maybe I'll fix that later. I have no freaking idea. It shouldn't be so hard. I mean, this should be the easiest thing in the world. People say just get AI and do AI. And I've tried to do AI. AI is even worse. I mean, no. I mean, there's no way. I mean, AI could give you a good idea or something, but it still can't make a decent spreadsheet. Anyway, all right. So what else was I going to weave to? It just reminded me how much I hate freaking spreadsheets. Okay, well, two areas I wanted to weave to. I wanted to weave to that, even though it looks bad and the stuff that's going on with Trump and the, it's crazy and everything, but the low this morning, at least it wasn't accompanied by higher volatility. Like I say, that doesn't guarantee that a tweet won't come out and then the volatility tomorrow morning might not be higher. Technical analysis can't tell you what will happen. It can tell you what did happen this morning. It's kind of bullish. I mean, compared to what could have been, right? Okay, now where else was I going to weave? I was also going to weave. I don't know. Maybe one of you guys remember. I told you guys to remind. I was going to weave in some other direction. Hey, Alan, what are you doing? I haven't seen you around here in a while. Any thoughts on when the Russell 2000 will come back? The pros were hoping for small caps. It just seems like a good time for it. Yeah. I was going to talk about SDTY. All right. Yeah, I forget the point I was going to make on it, though. Anyway, I'll figure it out. I don't have any thoughts on the Russell. It seems like people have been hoping for years. It's the time of the Russell and stuff. It's also kind of, isn't this kind of the growth versus value or debate? I mean, just Russell companies just kind of by their nature, because they're smaller, lots of times are what they would consider a value company because they've been beaten down for it, So, and it's also maybe momentum versus value or something. So it just has not been a good time for anything other than outside of the last quarter. Now but the 10 years prior to this, all you need to do is buy NVIDIA. Just look at what Nancy Pelosi does. Everyone says that, that she's crooked or whatever. Well, they do bad in years. They were the worst senators in 2022. They led the way down. They have no idea what they're doing. All they do is they buy all Paul Pelosi. I mean, he has an idea what he's doing about, like I do probably. I mean, he knows that NVIDIA is a good company and get leverage. And I mean, he uses leaps in NVIDIA. If you guys had 150 million, you guys would do the same thing too. When you have that much money, or I guess if you had that much money, you could afford to buy the shares, but why even bother? Why not take advantage of the extra leverage? I bet you for a long time too, the leaps probably got around the reporting requirements. I'm guessing. I don't think they used to report options in the reporting requirements, but be that as it may, past 10 years, all you have to do is buy NVIDIA, buy every dip. Maybe that's not, in other words, so that's not a great environment for Russell, for mom and pop companies. But yeah, I'm waiting for them to have their day in the day in the sun too. On SDTY, I was going to make some. Well, let's just do this. I want to talk about. People don't talk about this often enough, but I was reminded maybe this is one of the things I wanted to weave to, because when I was on the index buffer report, I was seeing some stuff in Defiance land. So let's look at triple QI this quarter and see how it's done. January 1st, sorry about that. January 1st, 2025. March. Okay. Let's see how triple QI is done against, everyone loves QDTE. QDTE has edged it by just a little bit. Now you can see though in the good times, and this is why everyone loves QDT, when the market was going up, QDT was spanking triple QI. But when the market started dropping, in fact, if we go right here, when was the last little high there? Let's look at March 25th. Now let's look at Feb 19. You look here and you can see it's beating it by a little bit, but it's because it's less risky on the downside. This triple QI, as you know, it pays the biggest dividend of any of the index Q-based funds. I've always said maybe the biggest dividend ever of any Q-based index cover call fund. That may not be true now that there's leveraged ones coming out, but this thing's insane. So the problem with it being so insane is in an up market, and it's paying that huge dividend, but that dividend means you're taking money off the table. So you're falling behind, and that's why people hate triple QI in an up market, because it'll lag so much. But in a down market, you can see it every time the market goes down. It's not just this time. Every time the market goes down, the Defiance ones will outperform the other ones. And QDTE, all I was going to say is it does the same thing as SDTY. They both sell options in the morning, which means they get credit. These funds, QDT, the Roundhill funds, get credit for the overnight gaps. The market goes up overnight because they don't sell their option until the next morning, so they don't cap their upside until the next morning. Well, if the market goes up overnight, they get a higher price, because remember, you're trying to buy low, sell high. Well, a cover call strategy is a bullish strategy. Well, if you break it into two parts, it has a stock and an option. Well, the option itself is bearish. You're trying to sell that. You're trying to sell the call for the highest price possible. Well, anyway, so that's kind of a built-in disadvantage in bull markets. QDTE, the Roundhill funds, and now the Defiance funds, SDTY and QDTY. And is there an RDTY out yet? But anyway, when that does come out, those funds should do much better in bull markets. But in bear markets, and this is an example, we could see QDT is getting beat pretty bad in in the bear market. If we, it's about a 3% difference at the lows. QDT is 3% ahead of triple QI. Here's another thing to look at, just not for nothing, but look at the dividends. I'm not talking about the drip. I always look at the bottom one. No dripping. Dripping's cheating. Dividends collected, $1.48. Okay, well, QDT, they paid you the same amount, $1.40. Okay, well, only problem with that is triple QI is a third cheaper. So that dividend's about a third better. Oh, it's paying you a bigger dividend, protects you better on the downside. Now, what's not to like about it? Well, what's not to like is on the upside, these things, it's not going to perform as well on the upside. So I guess if you knew in advance when the market was going to be up, when the market was going to be down, like last year would have been a great time to do Round Hill, but then you would have wanted to switch, believe it or not, you would have wanted to, I know people are going to argue with me on this, you would have wanted to switch to Defiance because those gigantic dividends it captures become more valuable in a market that's pulling back. Let's just say that. Whereas a gigantic dividend in a market that's going up is an impediment somewhat because it comes out of NAV. So, once again, it just goes back to if you're trying to grow NAV, trying to grow wealth, you wouldn't mess with these funds. These funds are for somebody that already has wealth, that is trying to trade a little bit of the wealth they have for some income. All right, so I think I've weaved enough. What else? SCSU's good. Good to see you here. I haven't seen you here. I haven't seen Alan along in a while. Okay, so let's see what you guys are talking about. Do you have a formula for the total amount of leverage if you have SPY and UPRO? So no, I don't. I don't have that. Do you know how to do that? Because I have no freaking idea. I can work on it though. Here's what I would do on something like that. I would use Portfolio Visualizer as your friend in this case. Yeah, Alan, I was definitely going to say something about SDTY. Yeah, but Portfolio Visualizer is your friend. Use, it won't tell you the exact answer you're looking for, but you can put it in there. You can put that allocation in there, which you were talking about, 80% SPY and 20% UPRO. So let's look at this. Let's look at this. All right. Portfolio Visualizer. Correlation, backtest, asset allocation. That's the one I want. But yeah, what I would do if I was you, and I think I've shown how to do this before, but get in here to edit portfolio, put in how much money you have and put in two portfolios. Put in a portfolio that's 80-20, that's moving slow. So I'm just going to describe how to do it. Put in your portfolio that's 80-20, go back a year. Yeah, go back a year and then and see how it would have come out. You could also, there probably is a way to solve for that mathematically, but I would just compare doing it that way, 80-20, and maybe do portfolio 2, maybe do like 90-10 or 70-30, maybe do a different mix. And then portfolio 3, maybe do just 100% SPY, and then go back and look and compare portfolios 1 and 2 to portfolio 3, and the amount of extra is what I would say is your amount of leverage. And make a good video. I should probably do something like that. That wouldn't make it not a bad idea. Not a bad idea. Looking for something like 1.7. What's 1.7? Maybe it's something you guys are talking about. Who knows? Well, all right. So I'm trying to think if there's anything else I wanted to talk about. I don't guess so. I don't guess so. I'm just looking through here, see if there's anything that I could remind myself of. Well, all right, guys. Well, unless you have any questions, I'll let you guys go. Appreciate you guys for being here. Had a pretty good little crowd today. How many people are watching? 14? Kick ass. Kick ass. All right, chalk outline guy. Maybe I'll check out your thing, your room someday. I think I was supposed to do that last week. Ethan, I'm sorry I didn't see your question about K-Web. I mean, I don't, you know me, I don't pay attention, or maybe you don't. I don't pay attention to individual stocks. I pay attention to indexes. I guess K-Web is kind of an index of Chinese. It's a Chinese ETF. So I'm just saying, if you like China, it might be a way to get exposure to China. But other than that, I've never looked into it. What about Clip? Doesn't KLIP just sell options in KWeb and pay I know that if you wanted to yield, you might look at something like Clip, but isn't there another China fund out there too that people are, well, there's BABA. Heck, BABA did great today. BABA, shit. They were killing it today. Let's look at BABA. I don't know if we looked at the index buffer, or we looked at the index buffer report. We may not have looked at the YieldMax buffer report. All right. But lots of days when everything else is down. My point was BABA and Clip, or Clips in the index buffer report. But some days they're the only ones that are up over here. Today, I thought they were up today, or maybe that was there. Actually, Clip was down a little bit today. But my point is, lots of times it might be a good hedge for American stock. They're saying that I was just seeing on CNBC today, it was a great quarter for all kinds of stocks except American stocks. Europe, Asia, there a lot of other sectors are doing better. I don't know, great quarter is the wrong word, but they're comparatively stronger. Let's just say that. So that'll probably last for a while until we get the tariff situation straightened out. When we get the tariff situation straightened out, it'll probably reverse itself, right? Oh, look, I see what you're saying. Not the actual leverage percentage, Alan. You're looking for. Oh, okay. I got you. You want 1.7% leverage. Okay. Well, I'm sure there's a way. I don't know if there's a way to do that in real time. There's a way, but I'd go back over the past year, do 80-20, and then see if that gave you. I don't think that's going to give you, because 1.7 leverage means if the SPY was up 20%, you would make 34%. But anyway, what about MDST? What about MDST? I don't know. Let's go look at FinViz. Oh yeah, this is the one you told me to check out with WEEI. All right. What is this? Limited partnerships, gas pipeline stuff. I mean, heck, what's not to like? They have assets under management. Yeah. How much? It's kind of small. Well, that's 86 million. I guess that's fine. It's not small. It's fine. Made 2% for the past year, paying a 9% dividend. It looks like a decent yield fund. Steady NAV. It obviously wasn't affected by the market pulling back, right? I mean, not too much. It's gone from 30 to 27 and a half. So it has pulled back some with the market, but heck yeah. Here's this WEE. Oh, I'm sorry. WEEI. I mean, the same thing. It hasn't pulled back much with the market. I mean, I don't know. It is down about 10% from its absolute high. Right, 22.74, and it's $1.50. It's not quite. It's not quite that much. Alan, I appreciate you for being here. Yeah, I'm getting ready to go too. So let's see here. Alan, a portfolio of 80% SPY, 20% U, has an effective leverage of 1.4. Okay, perfect. Perfect. All right. So I think that maybe if you did 60-40, you might get 1.7 or something. But the reason I'm telling you to back test it, go back test 60-40, or go back test it, but then look at the August pullback and see if you could have handled that. I mean, and it may have been just fine. And I mean, but I'm just saying that's what I'm telling you, to go back a couple of years and see how it and check out the drawdowns too. Well, let's see, on bonds, I don't really know that much about them, or I don't really care for bonds that much, but I do like this. Let's go to FinViz. Where is FinViz? There's a bond one by Neos, and well, I'm looking to get some bond exposure too, to tell you the truth. TLTW. TLTW. Flows year to date 16%. I mean, people are buying it. Pays a 14% dividend. There's a Neos one that does a similar, and was it TLTI maybe? Or yes, there it is. So I would get one of these two probably. I like the way I like Neos's other fund, so I would, I'd have to look at it, but I'd probably be leaning towards this one. Let's see. Now, the dividend's only 2%, but they haven't been around that far. It's only been around for 1, 2, 3. So you have to multiply that by, they've been around a third of a year. So you have to multiply that 2.0 times 3. You're going to pay maybe 8 or 9%, it looks like, at this rate. I mean, their last dividend for a month was, so maybe on that case, I would prefer TLTI. I like the one that pays the bigger dividend. And I mean, they're both doing the same thing or similar stuff. It paid 23 cents, and it cost, we'll call it $50, and we'll call 23.25. So what is that? $4 going to pay $4 a year, $3 a year. Even if it's $4 a year on a $50 stock, it's like an 8% payer, which is about, which is better than bonds. So there's either one could have a place in your portfolio, but I don't think there's a real lot of choices out there. But I'm going to say now, maybe this one. I just saw another one in the suggestions. I just don't look at bonds much, but maybe this one's an option. This is an Amplify, and it looks like a target fund. It's a 12% premium income ETF. I bet you they sell options and they do a target 12%. Something like this might be all right. I want more than 8%. I don't like, I mean, these things, when you sell options, I expect to make double digits, 12, 15, 20%. So this thing here has been around about a third of the year and has paid 4%. So that'd be about the 12% pace. Yeah. Well, there we have it. TLTP. I need to do a, I never heard of that one. I need to do some content on that. All right, what's Alan saying? Rather than bonds, he would use cows or something similar as a replacement to bonds. Yeah, I think covered call funds can be a replacement to bonds also, but you have to be careful because covered call funds are also exposed to the market, where bonds give you a little bit of inverse exposure. And it's complicated, but yeah, cows is so what cows is a covered call fund. I mean, right? So we're saying the same thing. Cows is a covered call fund on like fundamentally strong stocks, right? It's cash cows, so it's stocks that already make a lot of money, and then I think they on top of that they sell options on it. So yeah, I mean, there's lots of alternative to bond funds out there, but also the other thing is why not just get? I think covered call funds are a good alternative for bond funds, but you don't have to forget about bonds altogether. You know it. Why not get some bonds and then some covered call funds? I mean, because bonds have their, I don't know. I just won't want to forget about them altogether, but it'd probably be a mistake. But yeah, this one right here. So this one's made, unfortunately, it's the dividend is the problem with this one, right? Look at that. It's just paid a percent and it's been around for almost a year. You got to be kidding me. I mean, so you could call this maybe a growth fund that pays a small dividend or something. I don't know. So I try to invest in stuff I understand. I understand the option strategies really well. So that's why I just go crazy, especially the short-term daily option strategies. That's why I love anything that sells NASDAQ options, triple QI, triple QD, QDTE. That's why I usually kind of focus on those. But yeah, there's lots of alternatives. What about, and I really like the concept of the guy that wrote the book Income Factory. You know, I think people do need income in their investments. You have the growth and you have income. And yeah, I like the concept of the income factory and using closed-end funds to build your income factory. You can do the same thing with options. You're build a little hedge fund or I don't know, whatever. BALT, yes, we were talking about that. That's something else I was going to address, but let's look at BALT. So BALT is an innovator fund. An innovator fund might be a good replacement for a bond. An innovator fund that can't lose money. They have them that are totally locked down on the downside. They have a return stream that I think is similar to a payout stream, similar to like a bond. They have very little risk. Okay, but so I like these right here. So you have ones that are 100% buffered. These guys don't mess around. You can't lose money if you invest in these over a certain amount of time. But then they have ones that they have like you can lose money, but you can only lose 15%. The market's down 30%. If you buy this fund, you'll only be down 15%. They have all different. I mean, they have all different varieties in here. They even have something Tools ETF Finder. This was interesting to me. You could so for me, I would do NASDAQ. I want exposure to NASDAQ. And I want I want 100% buffer, no cap, and yeah, for a year. Use 7 ETFs. So there's 7 that fit that criteria. Yeah, here you go. CT, the growth power buffer. Oh, these are ones that are already going, but they show you how much cap you have left. So these, if you buy these, this is how much upside you have before you're capped out. And this is how much downside you have before your buffer. So this fund right here, CT, you can't lose money on between now and October. It expires in October. In October, you're going to have to. This is going to expire. You're going to have to put it in a new one. But you could take it out of this one and put it in one that goes out till October of next year. That's the idea. We were talking about this in Discord, and Grateful Trader was asking me if there's one that you could just hang on to without having to switch and roll. And there is. Let me find it real quick. Manage outcome. I mean, these guys have everything. Yeah. Here's one kind of that I think you can they just kind of keep a hedge on continuously. But it doesn't have 100% downside lockout. I mean, I like the one that's 100% downside. This one has lost. It's down from 11,000 to 9.8. It's lost $1,000. It's lost $1,200 on $11,000 of capital. It's down 10%. Now, granted, if it gets much worse, maybe that's about all it can. It probably has a buffer where it can't drop much more than this. I like the ones that just can't drop at all. But anyway, this is one where they just have a rolling hedge, and they just keep. You can buy this one, and you don't have to answer your question. You buy this one, and you don't have to switch it. On the Bolt, onto the one that you asked me about on Bolt, I thought we'd see it on here. I forget. Let me see here. Okay. The first letter means something. So the B means it's the power buffer series. And then the last letter's alt. Well, I don't know. In that case, I don't know. Usually they, I'm trying to find this B alt. There it is, SPY, B alt, calendar quarter. Okay, this one right here, let's just look. Innovator defined wealth shield. I think this one is going to be what I would call a 20%. It lets you lose 20%, but not much, but no more. But I think that's too much. I don't want to lose 20%. Yeah, it says, although the ETF targets 20% buffer, it may fall in the range of 15 to 20. There's no guarantee that and okay, now this one, the difference is they have an every 3-month outcome period. So it lets you lose 20%, but it just protects you for over 3 months. I don't know. I don't get this one. You can see if you would have started it, at the first of the year. It'd be $31. You only get 2% upside, 2.4%, and you're capped out. So the market was up more than that, but you didn't get it. And the market went down more than that. I mean, it's definitely helped you. It's made it where you haven't lost money. See, I'm fine with no losing money, but it looks like you can outcome period buffer. You're only protected to down 20. I don't know. I don't want it that much. That much. Anyway, they have great, but get on here. They have really good papers, and they have some. They have their own videos. Get it. Their videos explain it. Probably doing a better job than I'm doing. But all they're doing is they're taking funds and they're selling calls on the fund, which establishes a cap, taking the money from selling the call to buy a put, and they're doing that. That's what they're doing on all of these, but they're doing it at different levels. You're buying puts that are different amounts out of the money, and they're selling calls here. But that's all it is. This is a caller. This is a caller shop. We'll call Innovator a caller shop. And callers are great retirement tools. A caller, yeah. Can you still buy bond? I believe you can. Yes, you don't have to buy it when it comes out. A lot of people like to do that because when you buy it on the day it's issued, you get the full effect. Now, but some people like to trade them, I guess, and see, okay, this one has 2 months and it has this much. I don't know that much about it, but yes, you can buy it at any time. And that's kind of what that little thing I showed you. There's a little app on there where you can punch in what you're looking for, and it can show you which ones fall within those parameters. But yeah, Innovator's good. What's CCEF? CCEF covered call equals, what's that? Calamos C. Okay. Oh, I see. CEF. I got you. It's so yeah. This, it looks. I bet this is going to be an income fund that has some closed-end funds. Probably a fund of funds. They own a bunch of closed-end funds. Any of these Calamos ones could work. It would have been better to do the Calamos earlier in the year, because if you got Calamos now and the bottom's in, I'm not saying it is, but just for some reason if it was, and then you're going to cap your upside. I mean, I don't know though, but it depends on your circumstances. Calamos or Innovator can make a lot of sense for some people. Okay, so this fund right here is paid 7%, and it's been out a full year, so looks like it pays about 7 or 8%. Its holdings are, I've never heard of that, ClearBridge Energy Mainstream, India Fund, Nuveen Credit Strategies Income Fund, John Hancock Tax Advantage Dividend Income. I mean, great. It's a fund of funds. Obviously, no shit, Sherlock, right? Yeah. It's not to like. Has assets under management. It's been growing. So, heck yeah. Heck yeah. All right, guys. I appreciate you all for being here, and I hope you have a great day, and I will talk to you later. See ya.